Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and there are the opening bells, and I am joined by my good friend, Michael Fairborn, 20-plus year veteran of the financial markets. He's out there in the chat helping to answer your questions. He's well-suited to doing that, and he's a great resource. Thanks to all of you for joining me for this Trading Futures discussion this morning. Whether you're here in the live version or whether you're here in the recorded version, thanks for being here. A lot of stuff moving. Don't know if it's moving with a lot of liquidity. We're going to take a look at that. We're going to see which direction it's moving because, boy, I'll tell you what, it's been an interesting couple of days in the market as a whole. But before we get to that, which I want to get to really quickly, I want to get to a couple of quick housekeeping items, namely the fact that everything we talk about simply for illustrative and educational purposes only. It is not a recommendation of any kind. It is not advice. Remember that trading futures and futures options involves substantial risk. These are highly leveraged products. They're not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to trading futures products. Make sure that you understand the characteristics and risks of these products before continuing in considering any futures strategy. Now, when we talk about technical analysis, which we're going to do today, remember that that's only one way to look at the market. It's not the only way. It is not a guarantee of future success out there in the market. It is theoretical in nature. Schwab doesn't recommend these technical analysis as the sole means of investment research. Now, there's a couple of other things I want to take care of in here and talk about as far as kind of these housekeeping items. We're going to be using the thinkorswim desktop software platform, specifically the paper money version. It's not a guarantee of future success out there in the real world. It doesn't do some things that a live trading account will do. The paper money side does not, but it's a great playground and sandbox to learn and practice. So as you move your practice from paper trading to live trading, make sure that you're aware of some of those changes, some of the things that work in live that don't in paper. Also, we're going to talk about stops, and we're going to talk about stops related to futures contracts. Stops when it comes to futures contracts, because of exchange rules, don't necessarily always work the way that you expect them to. So stop orders are not guaranteed in execution at all. Sometimes those orders may be rejected. In many cases, they are going to be worked as an exchange designated limit order based on protection points. We'll talk about that along the way. And we'll talk about those characteristics and how we can be aware of those along the way here in this discussion. So let's do this really quickly. We're going to talk about futures. We're going to talk about some examples, but I want to jump out here really quick and see what's going on. I'm taking a look here right now. First and foremost, out of the gate, we've seen a lot of weakness in the technology sector. This is /MNQ. This is the mini NASDAQ index futures. And we've seen this continued sell-off. So left-hand side is a one-year daily chart. We can see that move to the downside. We also see the CCI, the Commodity Channel Index, as a trend strength gauge moving down into that minus 158 level, which suggests that this downward trend is gaining strength. We've seen that downward print in the CCI, starting to see some downward movement. Now, as we come to the market open, the right-hand side of this grid, and I've shared this before, I will share it again, but I want to talk a little bit about what's going on here, at least initially this morning. Right-hand side is a today 5-minute view. So this looks at what's going on today. Each one of these bars or candles in this particular case represents 5 minutes of trading. So we're into the first 5-minute bar. It hasn't closed yet. And we can see some downward momentum as portrayed by the MACD, the moving average convergence divergence histogram, as a momentum gauge, if you will. So this is gaining some strength to the downside. Now, on this particular candle, it is coming down and it has come up off of that low for the candle, but it's also breaking kind of below this move. So I've kind of outlined some levels of support and resistance, at least initially here in the NASDAQ or the mini NASDAQ futures contract here. Resistance is up here around kind of this daily resistance. We can kind of see this right here at about the 21,462 mark, and you can kind of see it right there as a resistance level. Support level down around that kind of overnight low around that 21,295. So in this particular case, I'm going to look at jumping into this downward momentum simply to take advantage of that move. Now, that candle closed. It did not close on the lows. I'm going to zoom in a little bit so that we can see this a little more tightly. And you can see that we're starting to see maybe a little bit of a bid here. Now, this becomes kind of the mark to beat, is the midpoint of that first 5-minute candle. And some more active trading, more active futures traders using intraday candles may look for midpoints of big candles, especially around the open, as a means to define first levels of support and resistance. And if we look left here at about the 21,369 mark or so, we can see that that area in the overnight time frame was actually representing a bit of a support and resistance level. So I'm going to draw that line in here at that 21. We'll just kind of call it here really quickly, 21,369. So what I'm going to look for here is an entry targeting downward movement in a fairly rapid fashion. Now, it might take a while to get there. It might not. We're coming back up against this resistance level, and we've broken back up above. So that's going to be kind of my target to get into this trade, would be a closing price back below that what was resistance, now potentially acting as a support, because this is moving higher. We're going to look for this to move to the downside, even though we're starting to see this upward tick. Overall, we've got some downside momentum. The stop that we're going to put on this initial trade here, kind of as this winds up in this first 5 minutes, is right off this resistance here at the 21,408 mark. So I'm going to draw that line in here and define this trade. The target we're going to look for is down here at 21,295. So I'm going to come to this line and right click, and we're going to create a sell custom with OCO bracket. We've done this before. I'm going to come back and explain this, but I want to get this trade in. Position size, by default in this particular case, is one contract. So we're going to sell one contract of this futures at a sell stop. And it's actually moved below that level. So we can go ahead and we can sell this. And we're going to open up that lock so that it moves that open. But we're going to use our stop here at 21,410. So I'm just going to come in and I'm going to put that in at our stop level here. This is going to be a buy stop at 21,410. And again, that's going to go off as a stop market order. But remember, that's going to be worked not as a market order once it triggers, or if it triggers, it's going to be worked as an exchange designated limit order based on those protection points. We're going to make that good till canceled because this may not go off all in the same day. And then we're going to look for our target down here at the bottom at the 21,295. So we're going to type that in, 21,295. 295, not 294, Ben. And we're going to make that a limit order. We're going to make that also good till canceled. Now, remember, stops don't work the same way that they do with futures contracts, or excuse me, with equities. These are going to be designated by the exchange as how they are worked, and they may be rejected. So that's why we're also going to put an alert on there. But I want to get this trade in first from this example standpoint. I'm going to open up this limit again really quickly, and I'm going to reset my prices because that moved around on that bracket order. 21,400. Whoops, we said 21,395, excuse me, 295. There it is, 295 and 21. Whoops, that was our target. Okay, slow down. 21,410 is our stop. 21,295 is our target. You ever get going too fast and you just think, hey, I got to slow down on this order? So I'm going to click on confirm and send. I'm going to read through this. Now, RG, we could set it that way. It's going to be worked as a limit order anyway. So we're going to set it as a market order. But we're going to read through this 21,335 limit to open and exit if it goes down to 21,295, exit if it goes up to 21,410. We recognize the exchange fees that we're going to pay here, and we're going to put this in our futures account. We're going to click on send, and we're going to fire that order off. And it filled for us because it popped back up above that level. So now we are in this trade looking for this to move to the downside, okay? So let's go back through this order and talk through this, right? Because I wanted to get the order in so that we can take advantage of that downside movement for this example. But I want to talk about what we're looking at here in this trade. So let me grab my magic marker and I'll kind of illustrate what we're doing here. So the idea is we were seeing this short-term movement on the intraday candles. That's reflective of this downward movement on the longer-term chart. We're starting to see some downward momentum in the RSI or in the MACD. That's indicating that there is downward pressure, okay? And what I used as a means to enter the trade is kind of the pivot point, if you will. That pivot between support and resistance was the midpoint of this first candle out of the gate today, right? This first 5-minute candle. And so in that first 5-minute candle, I used the midpoint, kind of the center pivot, if you will. And a lot of times that is exactly how some traders will use this, is with a pivot point type of study. I didn't use that. I can see that, I can visualize it, and I confirmed where that support was by looking left. So look left to confirm right. And I wanted to enter this in a downward direction, being the momentum kind of following in that particular direction. Now, in this particular case, right, we're simply looking at taking this kind of short-term move to the downside. So this was our stop. I will just put a ST for stop, and this is a target. TG for our target. This was our entry price, right? EP or entry point, right? So we were looking at getting into the trade if it broke that support. Our stop was above, our target was below, because we're looking at going south, right? We're going to the move to the downside, okay? Now, we can, Vlad, we can do some of that. We can make some of those changes and adjust that order. But you're right, we've got to kind of adjust that when you move that. And that becomes a challenge. And I'll show you, maybe a way that we can kind of work around that. But we're looking for this downward movement on this particular contract. This is /MNQ. So Dave asks a great question, and I want to kind of follow up on this here really quickly. You kind of see the construction of the trade, following that downside movement, breaking the support level. We've got our stop in place, we've got our target in place, and we're going to look for this trade to move to the downside. I'm going to clear those annotations really quick. And what I'm also going to do, because we know that those stops work differently in futures contracts than they do in an equity, I'm going to come up here and I'm going to right click and I'm going to create an alert right here. And that alert is if price goes above that 21,410 mark, right? And we're going to say if this goes at or above that level, let us know. And I'm going to click on create. Then the next alert I'm going to do is I'm going to come down to where our target was. Right click, create an alert. And if this goes below, we're going to change at or above to at or below. And if this goes below 21,295, then send us an alert. So we've alerted ourselves about the perspective of this trade, right? The decision points on this trade, where we're exiting if it goes in the direction that we want it to go. Short-term trade. Now, the other thing that you notice here, and the way that I created this trade, not necessarily by calculating, simply by visualizing, is that this distance here is about half of this distance here. So if this is 2, this is 1, right? So 2-to-1 reward return to risk perspective on this trade. Does that make sense? Risking 1 to make potentially 2 in the trade. That's kind of that perspective of how we set up the reward to risk scenario here. And let's see if I think we're probably pretty close to that. I just want to see how close we are to that. So what I'm going to do is I'm going to draw a line from the stop to the entry, and I'm going to duplicate it, and I'm going to put it right down here. There it is. And I'm going to duplicate it again, and I'm going to put another one right down here. And we came pretty close. That was just visualizing, right? We're a little bit, so we're just under 2-to-1 reward to risk ratio. Speaking of reward to risk, there's a big reward for us if you fill out the feedback survey, and not a lot of risk. Fill out that feedback survey. Let us know what you think of these webcasts. Help us to make these better. By the way, this is also a good time for me to remind you to click on that subscribe button down there at the bottom of the page and jump in and stay connected to the Trader Talks webcasts channel. Oh, and follow me, follow Mike Fairborn, all of the other coaches on X. My handle is at Ben Watson CS. Mike's is at Michael Fairborn CS, and the other coaches are the same way. So we're watching this trade kind of getting closer, right, to this point where we would look at buying it back to close the position. You're exactly right, George, in that context, right? So we're looking at, we sold the futures contract to begin with, taking advantage of that downward movement. We bought it back now, or we will buy it back to close that trade down. Now, I want to go back to the questions that that Dave from Oregon asked really quick, and then we're going to jump over and take a look at what's going on in the market today. I wanted to get this in really quickly just to demonstrate. Then we'll come back and we'll fill in some of those gaps. So Dave asked the question, see the contract info on each commodity plus the volume info on each one. So let's open up. I'm going to open up our left-hand side window on this grid. That's our longer term chart. We can do it over here on the right hand side, but I want to do it on the longer side just so that we can see that. And I'm going to click down here where it says on that hamburger icon, then click on maximize sell. And now we're looking at the 1-year daily chart for this futures contract. Okay. So I go up to the gear icon at the top of the page, and anytime in the Thinkorswim ecosystem that you see that gear icon, it looks like it went below our level. So very likely that order to exit is working now. And we just closed that trade down. That trade happened in a matter of about 10 minutes. We got into the trade and it moved in the direction that we expected it to move, and we got out of the trade. Doesn't always happen that way. Not a guarantee, not a recommendation. All right, so I'm going to go to that gear icon up here at the top of the page. I'm going to click on the gear icon, and I'm going to come over here in the top tabs to where it says futures. And when I click on futures, this gives me some choices in how this information is displayed. So Dave, to answer your question, do I want to see volume? If I want to see volume, I can click right there and see the volume subgraph for this futures contract. Okay. I can also see things like open interest. I can see things like contract change events. I can just select those to change that. And I can click on apply and click on OK. And now I'm seeing the volume on those contracts. Now, that can be sometimes helpful in making a decision. And you can set up your chart that way if you'd like to. All right. There's nothing wrong with that. If you want to see the contract specifications for the futures contract, you can just go up here to the top and click on the little drop down, and you can go to futures. And if you click on futures, then you see that information right here. So I'm just going to squeeze this back. So if we select our /MNQ, that's right here. Here's /MNQ. We can see that the tick size is 25 cents. We can see that the tick value is 50 cents, 25.25 is the tick size. The tick value is 50 cents. The initial margin requirement is 2,440.90, and our notional value here is 42,573. So I've created a label. I've shared this label before. I will share it again. But I've created this label that you can put on a futures chart so that you can see the tick size, the tick value, the point value, and the notional value for each one of those contracts. And that's a really easy way to see that information right there. All right. So that's how you find it. That can be helpful in doing in evaluating futures trades. So what I'm going to do is I'm going to click on my Flask icon here. Here's my futures labels chart label. I'm going to right click. I'm going to click on share. And I'm going to click on share once again so that I have a shareable link. I'm going to put this out here in the chat. Remember that anything that we share, any of these shared items, simply is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy, but I wanted to share that out there. Now you've got that label that you can put on your chart. Okay. And you can see futures information, as George points out, in the Analyze tab, also in the Fundamentals sub-tab. So we've got that information as well. So let's come back here. Let's restore ourselves so that now we've got that side-by-side movement. And let's kind of dissect this trade and what happened in this context. So we had set a stop right here. We entered the trade here, and here was our target. We got in on this candle. Actually, it was on this candle right here. It went down, it rallied back up a little bit, and then it went down, broke, and that's where our order filled, and we took that trade off. It's still moving to the downside, which suggests that maybe there is some continuing weakness in this technology sector as portrayed by the tech-heavy NASDAQ. Now, you might ask the question, well, why didn't we just stay in this trade? Well, I didn't know at this point, and I still don't know where this is going to reverse. So I was looking at where that support level was and using that as my target for this trade to the downside. Now, as this develops, then we may look at entering another trade to take advantage of that downward movement, perhaps on a longer term basis. So let's kind of shift a little bit. This was a quick opening momentum driven trade. Let's go over to the bigger picture and kind of see what's going on overall. So I'm going to change my grid here. Let me get rid of my annotations. And I'm going to change my grid now to, whoops, I'm still drawing. I need to not draw. There we go. Now we're not drawing. Okay, I'm going to go to my grid. I'm going to choose my futures grid. And let's just kind of see what's going on with the market as a whole here this morning. So here's the /ES. This is the S&P 500 E-mini futures contract. And we can see that a couple of things are changing here. In the last two trading sessions, we've broken the 50-period simple moving average, and we've seen the RSI, that relative strength index, kind of a momentum gauge in and of itself, moving to the downside, kind of coming back down to an equal low here. Now, equal low on the RSI, but higher low on the chart, on the price chart. That might be what's sometimes referred to as a hidden bullish divergence, where price is kind of still moving and you see the RSI moving to the downside, right? But we're not really seeing a huge divergence here in this particular case. There could be some continued movement. Next major level of support is right here at about that 59.69 level. Next level of support below that, down around the 58.27. Let's take a look at the next chart, which is the NQ, which is what we were just looking at. This is the larger contract. We were looking at the /MNQ, and that's what we traded in that illustrative example. But looking at this move, we again see perhaps a bit more, and this is a little bit different than what we were seeing on the S&P 500. The RSI in this particular case pushing below that equal low that we see back there in January, and price may be making a bigger move, maybe reflective of continuing weakness in technology stocks. The NASDAQ tends to be technology heavy. The Russell 2000, on the other hand, the RSI has already pushed down to kind of that extreme level, at least right to the top of what's typically referred to as the oversold level. In this particular case, the 30% level of the RSI. Remember, RSI can only go as low as 0. It can only go as high as 100. And so below 30 is what's referred to as an extreme, and above 70 also referred to as an extreme. Below 30 represents kind of an extreme downward move. Doesn't mean that it can't keep going down. Just likewise, if price moves or the RSI moves up into that plus 70 range, doesn't mean that it has to reverse and come back down. But you notice that we're finding maybe that there's a little bit of a support level here on the Russell 2000, maybe right around this 2180, 2185 level or so, because we're starting to see a little bit of a potential bounce. And this is an area that has acted as support once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. We're now on the 9th time. 9 times bouncing off of this support level. And maybe it's bouncing. We don't know. Maybe we're seeing enough push to the downside. This is the first time that price has bounced or tested this support level at that 2195 level. We'll call it 2195 to 2199. This is the first time in the last 6 months or so the price has tested that level where it has been below the 200 period simple moving average, because we've seen that simple moving average right here. It's tested the simple moving average. Simple moving average has moved above that support level. We're now below the 200 and testing right around this support area, which is maybe why it's bleeding through a little bit. So the question is, what's driving the Russell 2000 to the downside? This is small caps, right? And on a geopolitical level, we know that there are a lot of things going on. There's a lot of kind of uncertainty, certainly on the part of, tariff issues. But there's also some interest rate issues that are going on as well. So what I'm going to do is I'm going to come up here to the studies, and I'm just going to do an ad study, compare with, and we did this on Friday in the Market Movers webcast. I compared a lot of these sectors with certain things that may be drivers. Now, the Russell 2000 index, the companies within the Russell 2000 index, and then by extension, the Russell 2000 futures are interest rate sensitive. These are companies that are oftentimes sensitive to borrowing costs. So what I'm going to do is compare the Russell 2000 futures, these E-mini futures, to /10Y. /10Y is the futures symbol for the 10-year yield. This is a proxy, in this particular case, for interest rates, midterm interest rates, right? Kind of middle of the curve. 30 years, the far end of the curve, 2 years, kind of the front end of the curve, 10 years, kind of right in the middle. This is the one that governs mortgages, credit cards, auto loans, those types of things, okay? So here we have Russell 2000 moving to the downside. Typically, these move kind of in opposition to one another. When interest rates rise, the Russell falls. When interest rates fall, the Russell rises. Interest rates have been falling and the Russell's been falling at the same time. Now, there may be one reason for that. And if we go back into June of last year, we kind of see one of perhaps the reasons for that. June 28th of last year. And June 28th of last year was the rebalancing of the Russell 2000. It happens every year. It's not an unusual event, but they rebalanced the Russell 2000 index to be more sensitive to and more reflective of a higher concentration of technology stocks within the Russell 2000. Still maintaining the fact that it's small caps. So these are small cap technology stocks, but they're interest rate sensitive. But they became less so. So we saw a little bit of a tone change here back in June of last year, where now that inverse correlation kind of reversed itself somewhat, starting to see maybe more of a positive correlation between these two. So interest rates down, which would normally mean the Russell 2000 moving higher, but it's being dragged down by some of those technology stocks that are weighing more heavily on this particular index. So we can't necessarily rely on that kind of inverse relationship correlation between the interest rates and the Russell 2000 anymore. So that's why I'm not necessarily suggesting and looking at this from an analysis standpoint based on technicals that this is likely to bounce at this particular point. Now, it could. There's some technical reasons. It's at a support area. We're seeing not a big momentum-driven candle to the downside today. We're seeing it at a reversal point on the RSI. And if we come back down to our shorter-term grid, that grid that we were looking at before, and we were to put on here /RTY, the Russell 2000, we can see that on that short-term basis, it seems to be maybe finding perhaps this level of support here. So we could look for a potential bounce, even though it's got some pretty good momentum to the downside. I'm going to zoom in. We've got that potential for a bounce here up off of that support. It's broken below what was a previous level of support, but we could draw that with a big fat magic marker in this particular case. So what happens now in the next few minutes might be an indication of what is likely to happen in the next couple of days for this Russell 2000. Does it hold this intraday support level? Does it break that intraday support level? Now, we are, and you're absolutely right, Carol. I think you're right. I think that's kind of weighing very heavily on the market at this particular point of those tariff concerns. We're going to also use /M2K, which is the micro. We've traded this one as an example before. Now, the other thing that I wanted to point out here, whoops, not that one. I want to look at /M2K. There it is. The one thing I just noticed on this chart, I'm going to draw that support level in here again that we saw at that support area right around that 2176 mark. Notice what's building on the longer term chart here in the M2K. Left-hand shoulder, there's the kind of lumpy head, there's the right-hand shoulder. That's kind of the inverted head and shoulders pattern, or excuse me, a full-on head and shoulders type of pattern. So if that's the case, right, and that's what's building, then a break below this support level could mean a move lower. So if that's the case, we might take that and project it down to the downside. You can see where that support level is, down around that 1900 mark. Now, that might be a longer term perspective, because remember, this is a daily chart. This is a 1-year daily chart. That would put it back to that April-May timeframe, that support level. And there are a couple of other major support levels in here, including a big round number. Boy, I'll tell you what, we've just broken down through that level here, through that support level. So what we might look at here in this particular case is, again, I'm going to zoom in and let's see if, whoops, let me clear my annotations here real quick. And we're going to zoom in on this time frame on the longer term chart. And I'm going to look for a support level down here around that 2080 level, kind of that next major level of support to the downside. And if we were going to look for it on the intraday chart, we've really got to squeeze this chart a little bit here and see where that 2080 level is. We've got to go way down here. There's that level of support that we've drawn in. So what we might do in this particular case is look for kind of a shorter term movement to the downside to trade. Taking a look at that possibility of making that move to the downside, but also protecting that position if it goes against us. Now, protection, remember, stops work a little bit differently with futures than they do with equities. So I'm going to use this intraday chart is kind of a means to accomplish this. Okay, so I'm going to draw my zoom in here real quick. Whoops. Oh, it's because I got my chart zoomed way out. So I'm going to just zoom in on this time frame right here. And I'm going to use this resistance level on the daily chart, on the intraday chart, that high as my stop. I'm going to draw that level in here, 2194, and I'm going to make my target down here at 20, we'll call it 2090, just for easy math, okay? It's above the 2000 level, that big round number, but it's below the 2100 level, which is also a big round number. So we're going to look at entering this trade to the downside. We're going to create, again, that OCO bracket order, right? Now, a number of you asked the question, why couldn't we use the active trader tool? And I will tell you this, I'm planning next week, in next week's futures trading webcast, to talk all about active trader. I'm going to talk about that active trader tool and how we would use it. I want to focus simply on using these charts right now. So let's go ahead and put this trade in. We know that our stop's going to be here at about 2194. We know that our entry is going to be where it is right now, below that level, and our target is going to be down around 2090. So I'm going to right click, sell custom with OCO bracket, and we're just going to put our specifications in here for our trade. So our take profit level, the point at which we're going to exit if this goes to the downside, was 2090. So we're going to put that right here, 2090. We're going to sell this if it goes down to 2090. Okay. Excuse me, we're going to buy it back at 2090 or below. We're going to make that good till canceled. And then we're going to use as our stop, and again, remember, these are going to get worked as an exchange-driven limit order as opposed to a stop market. We're going to go to the 2194 mark, and we're going to make 2194 our trigger price. So we can specify the trigger price, but we're not going to guarantee the exit price. And in fact, if it's a fast market moving in the other direction, that order could get rejected. That's why we're going to also set an alert. And we're going to make that one good till canceled. And we're going to go ahead and click on confirm and send. We're going to read through this order, make sure that it's what we want, recognizing that we've got exchange fees that must be paid. And we're going to put this in our futures group, and we're going to go ahead and we're going to click on send and fire that order off and look for that order to potentially fill for us. We might need to work it a little bit. It's coming back against us. Now it filled, and we're looking for that target to the downside. So I'm going to set an alert right here, right click, create alert at that level at or above 2190. And create that alert. And then I'm going to come down to my target, and I can do this over on the longer chart as well. And we'll create that alert right here at or below 2090. There we go. There's our alert on both sides so that we are alerted if this moves opposite the direction that we want it to go. So this is a little bit longer term perspective, but the same context, the same way that we constructed it as what we did on that ES chart. So same type of structure for the same reasons, looking at that potential movement. But those are some of the tools that we can use. Now, the other thing I'm going to share with you is this futures grid. And I've shared this before, but I'm going to share it again. And again, remember, any shared items, simply for illustrative and educational purposes only. They are not guaranteed as to time or accuracy. So I'm going to go ahead and put that out here in the chat. So there we go. Now, that being said, hey, I like that tip. George has a great tip. If you're importing something that's been shared and you name it with an A or like a 1 or something in the front position, it'll come up at the top of the list. So that's a good way to find those. Absolutely. I like those. Great stuff. Gosh, I love when we're all collaborative about this stuff, right? Okay. So let's take a look here really quickly, and look, it's starting to come back against us, and that's fine too. I mean, we know, this is not a guarantee. We're simply speculating on that potential move to the downside here in this particular case, right? So as this is making that move to the downside, again, we've got perhaps a little bit more than a 2-to-1 reward to risk ratio in this perspective. In fact, we're probably more like about 5 or 6-to-1. So no guarantees that it's going to get there. And so this is something that we're going to want to watch. As always, we're going to want to watch any trade that we put in from that context. So it's starting to roll up against us a little bit here, but we've got that stop and that alert in place. So let's do this. Let's come back over here to our YFT futures grid for just a second and see what's going on overall. There's the Russell 2000 that we were just looking at. Here's the NASDAQ, or the S&P 500 seems to be finding a little bit of a level of support there. And here is the NASDAQ, which seems to be seeing a little bit more push to the downside. So 2 other things I want to do before we wrap this up. I want to go over here to the monitor tab and take a look at where we are. So we've got this long position in corn, which seems to be going a little bit against us, right? Corn, we got into the trade at 489. It is at 475. So we'll double check the chart there really quickly. Then we've got our M2K. We're short 2 contracts because we were already short 1. Now we're short another one, and that's moving in that direction. And we got into and out of our MNQ, which resulted in a theoretical gain here of $180 based on that trade that we saw move in our direction. So let's take a look really quick at corn. I'm going to go over to our charts. I'm going to put this on our single grid really fast. We'll look at MXC. That's our corn contract. Whoops. /XC. Sorry. /XC. That's our corn contract. It's already the minis. And that's moving in the downside. We were looking for corn to be moving to the upside. We're seeing the RSI falling, however, and we're seeing the ADX falling off, both of those trend indications. So perhaps time to close this corn trade down. And I'm just going to simply right-click, create a closing order, and we're going to sell that contract. We're going to take a small loss, but potentially avoiding a larger loss in that position. So we're going to read through the order, make sure that's what we want. We're going to close that position. It's not going in the direction that we wanted it to go, and pretty clearly not going in the direction that we wanted it to go. And we're going to get out of that particular trade. Then the last thing I wanted to look at as we were on the chart here is just a couple of things. /CL. Wanted to look at crude oil, /CL, and see what crude is doing. Crude seems to be slipping closer to this major level of support down around that 67 level, breaking down through this support around the 70 mark. I want to look at /HO, which is heating oil. Heating oil seems to be echoing that. And then the other thing that I want to look at here finally is /BTC. This is Bitcoin. Now, I'm going to say this about Bitcoin. Again, we're using this as a means to define what's going on in the market as kind of a proxy for that alternative investment, making a big move to the downside out of this support level. If you're going to trade Bitcoin futures, if you're going to trade any crypto futures, equities, options, make sure that you recognize that cryptocurrency and cryptocurrency products, derivatives, futures contracts all carry an element of risk that is different than equities. There are geopolitical, there are political, there are technology risks that are associated with these contracts. So be aware of that fact. But starting to see that downward trend gain a little bit of strength here. Next level of support may very well be this gap bottom, or that gap edge right here at around that 80-90 mark or so. So something to keep in mind and watch for. And this may be perhaps a bit of a double top move to the downside, which symmetrically would put it at a support level. If this is the support that just got broken, double top would put it right down here on that 81 thousand support level. All right. So good stuff to keep in mind. If you want to learn more about futures, come on over here to the Trader Talks webcast channel, search for futures or active trader, and check out our forward calendar of webcasts and live events here at Schwab Coaching, schwab.com/coaching. My thanks, of course, to my good friend, Michael Fairborn, for helping me out today and our great production staff. And of course, my thanks to all of you guys for being here with me. Whether you're here in the live version or the recorded version, thank you. We'll see you again next Tuesday. We're going to do this again. We're going to focus on active trader next Tuesday, and join me for that. But I will see you guys again very soon. Take care, everybody. Have a great day. Bye-bye.